So you're just browsing on the internet looking at what to buy, or you're walking down the aisles doing your weekly groceries when you come across something that you've not seen before. Right in front of you is the entire world. Obviously a lot smaller than in real life, but the description still says the entire world and it's less than $100. You think to yourself, this seems like a really good deal. After all, that's a lot less than filling up with a full tank of gas at the minute. The description says you get ownership in some of the biggest companies in the world, millions of people now work part of their day for you, and it can even grow in value over time. Surely this must be too good to be true. I think we should check on some of the small print together. Can you really buy the world for less than $100? Let's go find out.
This is a journey into money. Loads of money.
Alright, this video is about how you can invest in the whole world in one go. And it's going to be just as important if you've never invested before or if you've been in the stock market for a while, because it might show you some of the new ideas that you hadn't considered before. How does this work then? I can already hear you asking. Firstly, we've got to cover off what we're actually talking about here. And this one's for all of you, whether you're based in the US, the UK, or anywhere else in the world. Enter from stage left the Global Index Fund. Now, I know many of you may be aware of an index fund or ETFs that also fall into the same category, but let's cover off the basics. If you want to invest in lots of different companies, you've got a couple of different options. You can pick individual stocks of companies that you like and then put together in your own collection, pretty much like putting together a meal at home. You can choose all of your own ingredients, cook it just how you like, and it doesn't matter whether you eat it hot or cold or with your hands. I mean, hopefully use a knife and fork, but I'll leave that bit up to you. So whether it's Apple, Microsoft, Amazon, Tesla, or thousands of other companies, you can just pick and choose those companies and buy their stock through your favorite app or online broker. Many of them now allow you to even buy fractions of shares, so you don't even need to have thousands of dollars in your account to buy some of these companies. Here's the issue though, it's really easy to buy stocks, but it does come with a lot of responsibility too. Hopefully you've taken the time to look at the company in detail, you know what they do, what they sell, how they make their money, and also you've got some idea if you're actually getting a good deal on that price. That bit is probably the most important, but that's a whole video in itself. Now, on the other hand, what if you don't cook for yourself and you prefer to eat out and let someone else do the cooking for you? You don't have to worry about getting the ingredients, turning on the cooker, or burning anything. You just put one order in and you wait for it to arrive. Well, in the investing world, here's where funds come in, and specifically global index funds. Inside our dish or fund, we can own thousands of shares in companies from all over the world. It's pretty much like going to a fancy hotel and having a buffet breakfast all on one plate. Isn't it funny how at home you might have some toast or some cereal, but the moment you go on holiday you think, yeah, I really need 2 sausages, eggs, some fruit, yogurt, and a croissant too. Oh, and throw in a fruit juice with my coffee. Anyway, all a global index fund is a collection of companies that are based all over the world, sorted by their size, also known as market weight. The bigger the company, the bigger their share. And as investors, the fund brings all of your money together and distributes that investment toward all of the different companies across the entire world. Let's have a look at an example and it will explain things a lot better. This Vanguard Global Index Fund has nearly 9,500 stocks inside of it, and those companies are based all over the world. We can see that this fund is made up of 10% in emerging markets, 16% of European companies, and then the majority is in North American companies at just above 60%. If we look at the exact companies that the fund holds, we can see that it's made up of the world's most valuable companies. Remember how we said earlier that it's broken down by market weight? The larger the company, the larger the proportion of that fund that we give to that company. Pretty much like cutting up a pizza, but rather than even slices, we just give the biggest slice to the biggest guy in the room, and so on there. That's my best food story to keep that one in the storyline. If you're enjoying the video so far and my awful attempt at trying to blend food analogies, then please do me a huge favour and hit the like button, comment below and subscribe too. It really helps out smaller channels like mine cut through to more people like you. And now with that like button turned bluer than Stilton cheese, let's get back to the video. Anyway, the biggest companies are Apple, Microsoft, Amazon, Alphabet, and Tesla. And as you can see, they all make up a really big part of the fund. And these are all based in the US. However, you will find companies like TSMC and Nestle on page 2, including many more international companies, because they're all really valuable in their own right. If you had $100 invested into this fund, the percentage you see here would be how your money would be divided up. So Apple would get $3.29, Microsoft would get $2.93, and so on. Pretty much nice and simple. You still might be wondering how you can buy all of these for $100. Well, this part is the fun bit, because this fund is an ETF, short for Exchange Traded Fund, which means you can buy a share of this ETF in the same way as you might buy a share in one single company. But this time, you'll get thousands of stocks inside your portfolio rather than just one. Currently, you can see that in this example, VT, which is the ticker symbol for this fund, trades at about $83 per share. So For under $100, you can own a share in thousands of different companies. It might only be a really small one, but you get the point. For a very small part of someone's day who works at Microsoft, you'll benefit as they grow the company, and every time someone buys a new Apple phone, a really small cut of those profits can go back into the business that you own a part of. And if you buy a new iPhone yourself, then consider yourself helping to grow your own business or getting a tiny discount, whatever sounds better to you. There are loads of funds out there that cover the world from lots of different providers, but I'll let you do your own research and have a look into all of them. VT in the US is a really popular one from Vanguard, and here in the UK we've got a similar one which goes by the ticker symbol VWRL, which is about as close as we can get. But lots of other providers are available. Don't forget to read and understand everything first to make sure you're getting what's right for you. Now, buying and owning the world might be one of the best strategies for investors for a number of reasons. The most obvious reason is that as investors, all we want to do really is make more money than we put in. But we don't know what the future will hold, and nobody else does either. We don't know if Apple and Microsoft will continue to grow fast every single year, or we should invest more money into Europe or China or anywhere else. The US has had a really great run for the past decade, but the next 10 years might see more growth from outside of it. In fact, through history, we can see that this has happened in cycles. Sometimes the US performs, and sometimes international stocks have performed better. The only thing that might be more of a certainty is that we can be certain that we have no idea what will definitely happen. I'd never bet against the US, but as a long-term investor, I do want to make sure that I keep all of my bases covered, and this is exactly what the global fund can give us. This is pretty much the definition of diversification, making sure that we have enough of our money invested into different places in the world, into different countries and different industries too. Whether tech stocks do well or suddenly banks start to shine, oil companies might fall, or even electric vehicle companies, if we own the world, we benefit overall as the market gets bigger. On the other hand, if we only have 3 or 4 stocks, we have a lot more risk and not necessarily more reward, as there's plenty of companies and industries that have gone bankrupt and lost everything in just a few short years. If we look back in history, we can see that many companies have gone bust and very few survive in the long term. So if we have a global index fund, or at least a broad one with many different stocks inside of it, we protect ourselves in the event of the worst happening. The start of 2022 has reminded all of us that really anything can happen. And it's a tough world out there. Investing like this is the same as if you ran your own restaurant and you had 2 different branches. In one branch, you only ever get one customer who comes in each day. Now, this guy's a big spender and he buys like $5,000 worth of food to take out every single lunchtime. But in the other branch, there's no big spenders, but instead you get 500 different customers who spend about $10 each on a normal day. If you were to look at each branch, the one with your big customer would be like investing everything in just a couple of stocks, or even just one. Sure, it can pay off and it might end up okay, but there's a lot of risk that this guy's business disappears and takes all of your income with him. For all we know, his surname could be Madoff. If you have 500 customers each day, this is much more diversified business. You'll still get the same level of income, but you don't have to rely on any single customer if you'd have a really good day. If someone doesn't want to buy lunch from your place anymore, if they never eat out again, no worries, you can always get another customer. It's exactly the same as if your company goes bust in your global index fund. Out of the thousands of companies, you might just lose a few cents or $1, and then someone else can take its place. But if you place all of your bets on one company, you risk losing everything you put in. To buy a share in a global index fund like this, I'll leave that bit to you, but make sure you use a trusted broker and don't forget to take advantage of any tax-free accounts that you might have. This is really important because the more you can save in long term from fees and charges, the more money you'll have later on, especially if you invest for the long term, which is definitely essential when it comes to investing in the world. So in the US, make sure you look up the details of what a Roth IRA is and your 401k. And here in the UK, make the most of your stocks and shares ISA as well as your company pension for sure. Any costs you can save or fees will add up over the long term and could cost you a huge amount of money. Let's just take an example and show why this is important. Let's just say it's time to retire, or we want to get some money from our investments that we've built up over the years. We've got around $100,000 in our account, which is about £81,000 for us Brits. Because we've used tax advantaged accounts, all of our investments have grown free from any tax, so when it comes to take money out, we don't have to pay anything. This could mean that if we take out $10,000 for example from the account, that's all for us. But if we were just using a regular account for our investing, we would be liable for taxes which would depend on our personal circumstances, but could add up to a lot of money. We would have to pay capital gains taxes for any profits that we'd made, and don't forget dividends too along the way. Remember to check with whatever local tax laws are, because whatever way could cost yourself a lot more. The bottom line here is that investing can be simple, and you've got access to be able to buy a share in some of the largest companies in the world for just a very small cost to get you in. The hard part is making sure that you consistently invest over a long period of time, because unfortunately, that $100 is not suddenly going to make you a millionaire. You need to invest in good times and bad times over many years to really start to grow that money. And you're also going to have to be ready to see things drop, maybe even for many months and years. You can almost be certain that it won't be a straight line up. If you did invest this way, there's nothing wrong with just having a global index fund and leaving it there. But there's also nothing stopping you being even more diversified and even picking your own stocks too on the side, or even looking at different assets like property, gold, or even cryptocurrency. Personal finance and investing is just that, personal to you. But as long as you have your eyes wide open and you understand the risk, then the world really is your oyster, and you can eat as many oysters as you like. $100 to own the world? Sounds good to me. If you want to see what I have invested in my own personal investment portfolio, then feel free to watch this video next, as I share fully transparently my current Vanguard portfolio, which contains most of my investments. Or make sure you check out this video which takes a look at some of the other types of funds from Vanguard, which is all aimed at UK investors like me that might be good options to build up some long-term wealth. Drop me a like on the way out, subscribe for more, and as always, happy investing.